Hey guys, it's that Dividend guy, and today I wanted to do a different type of video. So I was going through and looking at stocks that recently lost their status, as in their dividend aristocrat status, which means that they had paid an increased dividends for 25 years or more, or their dividend king status, which means that they have paid and increased their dividend for 50 years or more. And I wanted to go through, kind of explain why they lost their status on each individual company, and then I wanted to go through and say which one I'd buy, which one I would hold, and which one I would sell. So let's take a look real quick at these three companies. First, of course, we have AT&T starting off. They lost their status, I believe, a year and a half ago when they did their Warner Media spinoff. They are now a pure telecom play, but they got rid of direct. They divested out of DirecTV, spun off Warner Media in their entertainment conglomerate. So they are now a pure play telecom. But when they went ahead and got rid of those assets, they decided to cut their dividend by, I believe, 40% because obviously they were losing a third of their cash flow with Warner Media, so they couldn't really afford to pay the same dividend after divesting all of those assets and losing that cash flow. So it made sense, but it ticked investors off. They lost their status, and they really haven't they did go up a bit, but they haven't really seen a whole lot of price appreciation. Prior to that, they were in the 30s. This is originally when I bought them. Then the Warner Media happened. It went down. I thought it was a great deal as an investor because it was like 18 bucks a share, and originally it was 30. But now after all of that headache and management kind of wised up, even though it's not what investors wanted to hear, they did need to get rid of that dividend because it was hurting the company, and they believed that they could get better growth in the pure telecom play, and put not only more cash into the business, but put cash in at a higher return than what they would have if they would have kept both DirecTV and Warner Media. So they lost their status due to them cutting the dividend because they decided to trim their business down to their pure telecom play. Next, we have VFC Corporation. So they own Supreme, Vans, and other outdoor active and work equipment. They have apparel um, for athletic and outdoor-based lifestyle brands. They make footwear, equipment for backpacks, luggage, and accessories. So they own brands like the North Face, Vans, Timberland, Icebreakers, Dickies, and Supreme, just to name a few. Um, they actually have just cut their dividend by 40%. They were a dividend king, and so they are one of the rare companies that actually cut their dividend after they got that status. Usually companies are very strict about keeping that, and they are punished pretty harshly when they do cut that status. So as you guys saw, AT&T, once it cut that status, it did dip as well. Look at this. This is right around the time that they cut it. They lost $4 or almost 14% of their share price. So we have a telecom play, and we have a fashion clothing type company as well in Vans. And then Leggett and Platt actually lost their status for a completely different reason. They fell below the threshold for overall value or market cap, and so now they are considered a mid-cap company. And in order to be in the S&P 500, you have to be a large cap. So they still lost their status, but for a different reason. I know that they make furniture, and they make different components for homes, offices, automobiles. I have not owned Leggett and Platt before, but this is one that I don't have a lot of expertise in, honestly. But it is one that did lose its status. So the real question is, what am I buying? What am I selling or not touching? And what am I going to hold for the long term? So currently, when it comes to the amount that they are down, I would be buying VFC right now because even though they cut their dividend, they still have a great yield, I believe over 4%. And so they are over 5%, 6%, geez. So they have a really high yield even after their 40% cut. So I would have to buy VFC Corp. I've owned it before. I kind of understand the business a little bit better than I do Leggett and Platt. So I would be buying VFC Corp, and I would plan on holding that until it went up or until the dividends started increasing again. And I would hold it for a relatively probably 2 to 3 years if I had to. Then my hold is going to be AT&T. So this would be the position that I would plan on buying and holding for the long term because people need their cell phones. Yes, they cut the dividend, they ticked investors off. I owned AT&T and I sold it after all the I felt like management, was dishonest. But when it comes to the just pure business, I like AT&T more than I like VFC and more than I like Leggett and Platt. And I understand the business more. I actually worked at a TDS, US Cellular, and they are one of the big like three telecom giants, and they are big enough that like we had so many customers come in that were complaining about AT&T, saying that their customer service, this or that or the other thing was so bad, but they didn't care because they were big enough that they just kind of let them walk out, right? Verizon was the same way. So they're just so big that it's honestly it's like a I would want to say duopoly with Verizon, but T-Mobile is now in that kind of in that triple space as well. But it's kind of like Pepsi, Coca-Cola, and Dr. Pepper, right? So everybody else kind of, if you're a smaller brand, you'd really get overshadowed by those big three. Is essentially how it is in the telecom space. So I would definitely put my money into AT&T and just let it ride. Honestly, though, that might be a bad call on my end because it has not moved in the past 5 years. It's down. In the past year, it's only seen $1 of appreciation. But since now they don't have the headache of DirecTV, they don't have I honestly think that the Warner Brothers deal was a good deal for them. But now that they've divested that, they spun it off into a different company entirely. I think that they are much more poised for growth, and they have an opportunity to really capitalize on the growth of how telecom is changing into 5G. It's not a very lucrative business. It's very debt capital intensive heavy, but overall, I know that this is something that people are going to need for decades. So this is definitely where I would plant my money and just let it ride out. And then finally, I would sell or I wouldn't even own Leggett and Platt just because I am a Warren Buffett, you know, disciple kind of. So I only swing at a pitch when I understand it. So I'm not going to be buying a stock that I honestly do not understand. I don't buy it for the status. I obviously understand. I own Vans. I have Supreme sweatshirts. I understand clothing. I understand it's a necessity. People need clothes. They obviously don't need to buy from Vans, but they need clothing. Also, people in this day and age need their cell phones. I'm recording this on a cell phone. I have US Cellular for service, but you need service from generally from the big three. So, or US Cellular or any other like smaller like Mint Mobile carrier or whatever. You need cell phone service. So, just those business models I understand, and I think that um, they are more time tested, and I think they're a bit more lucrative than Leggett and Platt. So I would definitely be buying VFC, and I would plan on holding for a decent amount of time, a mid time holding, a mid amount of time for that holding. AT&T would be the long holding for me, just because I understand the telecom sector a bit better. I don't like the capital. How much capital they have to put into the business, and I don't like the debt heavy nature of that industry, but over the long term, I'm more comfortable with it than I am Leggett and Platt, and then I would not even touch Leggett and Platt. So these are the three stocks that I picked that have recently fallen off the list of aristocrat or king status. Guys, let me know down in the comments, what would you buy? Were you stung by the AT&T management decisions just like I was? Are you ticked off that VFC cut their dividend? Are you surprised that Leggett and Platt, got dropped? Let me know down in the comments below what you would buy, what you would sell, and what you would hold out of these three. Always happy to see different opinions, especially from newer investors. I know a lot of people, when they see that dividend aristocratic king status and it goes away, they sell it. A lot of times people don't even sell companies for the underlying business. They just sell it because of a management decision or because that status was lost. They don't pay attention to the underlying business. And so I think that's a lot of the issue when these companies lose status. You can see, especially like with VF Corp, they lost like 20% of their value in the past 3 months. That's very short term. That's like in the short term, the market is a voting machine. In the long term, it's a weighing machine. So market sentiment against VFC is bad right now because they just lost their status. They cut their dividends. So your income, if you were living, let's say you were retired and living off of this dividend income, was 51 cents. Now I believe it's down to like 30 something. If your dividend just got cut by 40, if your income just got cut by 40% from your job, that's pretty dramatic if you're living off of this dividend, especially if you've owned this stock for any cumulative amount of years. Let's say you've been living off these dividends for 30, 40 years because they've increased it, like they've snowballed very well. They've been a very good compounding machine up until this point when it comes to the dividend aspect of the company. That's a huge hit to your dividend income. So I would not be surprised, if after the shock and whatnot, everything kind of smooths out. If VFC starts to go up again because they have more capital to put into the business, and financially, I think it was the right move for the company. But it did. If you're a retail investor that's living off of that income, both AT&T and VFC might have left a bad taste in your mouth. So let me know down in the comments below, guys, what company you would buy, what company you would hold, and what company you would sell. Thank you guys so much for watching, and I'll see you guys in the next video. Take care.